Hi, this is Jack from AlphaCharts365 with a State of the Market update. This is March 8th, 2020. Before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and own risk tolerance. Alright, so we're going to start with the S&P 500 chart like we usually do. And here I have SARS, Ebola, and currently COVID-19 shown on there. I also have Fibonacci retracements from the 09 low and the most recent high. Okay? And so this may give us some idea of potential areas to find some support. And this 2750 area makes some sense here, and it's been support resistance in the past. And then below that, 2353, which is quite a way away. We don't know if that's, no one knows if we're going to bounce up from this area and go straight back up and make new highs, or if we're going to go lower. These are just areas of potential. They're just potential areas, right? So that is some stuff I'm looking at. Now, looking on the daily time frame, as you can see, we have held this prior area right here, right? And so buyers have showed up so far, right? Big deep sell-off, buyers showed up. Big deep sell-off, buyers showed up. We'll see if this area can hold. If it can, great. But if it can't, there's your 0.236 below, which kind of makes some sense. And there's your 0.382 right there. So again, just areas I am watching. Looking at the QQQ, looking at measured moves, right? So we went down, kind of a bear flag, right? Now if we're breaking down again, what are the areas that we can expect? The full measured move would be the 180 level, right around here, okay? It doesn't have to be a full measured move, but if we're going where we think, potentially for a full measured move, that's where the low end would be. Again, maybe this area holds. Maybe we bounce higher from here. Nobody knows. But if we do start breaking down, there is a potential target. Also, the 0.618 right here at 195 on the Qs, that makes a lot of sense too. Doesn't mean it has to make it all the way down here. So this 195 may offer some support. It just aligns very nicely right here with prior resistance, right? IWM by far looks the worst out of any of these charts. We made new highs here, couldn't even get back up there this time, and we're rolling over, and now we're below this important area. Maybe we're right at it, we'll say, okay? So this is important, and I think that a further weakness from here, and things can go a lot lower, potentially, in the IWM. Okay, and the Dow Jones composite average. Again, this was the area that I was watching as important. It sliced right through it, came back up, kind of like a retest here, and rolled back over. And if you look at these moving averages, like the purple, which is my fastest moving, a 23-day EMA, just sliced through everything, and now everything is starting to turn lower. We haven't seen that type of slicing through, like right here we did, kind of. And again, there was much more weakness coming after that initial move. So just some, again, going through both averages. And even here, if you look at it, it kind of bounced right back up when it hit the 150-day EMA. We are still strongly going down. So the momentum to the downside is really strong. Looking at the semiconductors, which I like to follow, you'll see a trend line that has been in place since 2019, and price broke it, and we are hanging out below it. So semiconductors, which is a leading index, a leading sector, can usually shows where we're going, and if it's heading down, then the momentum is to the downside, right? Now, if we reverse back up, back into this trend line, then it's no big deal. But if we continue down, it's a big deal. Lumber. lumber broke, and it's still, we'll call it in this range, chopping around. Hasn't quite hit this bottom area, so that is an area that I will be watching to see if it holds or not. In prior area of importance, I mean, going back way back, right, to '09, and so a break below this area would be extremely bearish. Now, if we tap it and we kind of start going back up to the upside, well, then we're just in a range for lumber and probably the broader market at the same time. Going to the put-call ratio, and let's clean up with a line chart. Okay, so on the put-call ratio, I designated these areas as important because I've seen reversals happen once it gets above, right? So we did go above it, came back in, we'll call this a lower high in the put-call ratio, and now we're back in this area. The thing is that I don't know if this was enough to signal a capitulatory move. With the way that the indexes broke so much, everyone rushing for the exits all at the same time, to me, that's not capitulation. Like going back in 2018 December, right? This was the low right up here. This was capitulation. Everybody, right? Going back 2016 January, this was capitulation. Like, this was really capitulation, right? I mean, everybody went for the doors. Look at this. February 2010, right? This is capitulation. So this, to me, does not look like capitulation yet. A spike in this 1.6 or higher range, I think that really says capitulation. This says a little bit more of complacency, that, a buy the dip type of mentality. That's just my opinion. As any of this is my opinion, right? High yield bonds, great measure of risk on, risk off, and rolling over hard. I mean, there's not much more to say about that. Now, I've seen a lot of information about the VIX this weekend and about how high it's been. And there's definitely something to that, right? Because you see, it got pretty high here, and then it rolled over. It got pretty high here, and it rolled over. But there's been times where it gets pretty high, or even higher, and it just chops around in that area too. So I'm not sure if we can quite say it's going to roll over tomorrow. Obviously, eventually it will roll over. But I don't know if it's this type of scenario or if it's going to be more of this type of scenario. None of us do. Depends on the numbers about the virus, COVID-19, and what's going to be happening with it. Because I think right now this is a news-driven market, and news and fear of economic slowdown, worldwide economic slowdown, is going to is really controlling the market. This disease not only is infecting and hurting humans, it obviously is infecting and hurting the world economies. Value line geometric index. Again, so the median stock. Let's go to a weekly on here because I love the weekly on this one. Again, very defined support or resistance area here, right? Resistance, support, jumped up, sliced through it, chopped around, and now we're back to the lows. So, any further weakness here, and then, I think that you can safely say this could be a false breakout, and we're rolling back over, and things could move much faster. Again, this is more of a measure of the median stock, so it shows you how the selling is so broad-based. It's not just small caps or technology or large caps being sold, but basically everything is getting sold. All right, so what is working? Well, right now, gold, right? Heck, gold is working. Look at gold on the weekly. This amazing looking base, popped up, retested, and now moving higher. So I think any further retests in this 150-ish level would be an extremely good risk-reward area. But gold is definitely working. And wanted to show one more chart about give me a second. Okay, so this is, oops, I typed that wrong. So this is copper futures against gold futures, okay? And this is a weekly chart. And so if copper is outperforming gold, we can expect the economy is doing good. And if gold is outperforming copper, in general, the market or the economy is expected to not do quite as good, right? So you see this started rolling over, made a lower high back in 07, right? There's 06, the high, 07, rolled over, very bad, right? It kind of rebounded and peaked in 2011, rolled over, made a lower high from 2013, 2014, again, rolled over and made this low. Well, now we are now making a new low right here on the copper futures to gold futures contracts. So what does that mean? I think the expectation is, this is, and it's been rolling over, right? It rolled over. This started rolling over April 2019. Big sharp decline, kind of a bear flag. Started its next move, right? And I think that we already broke this area, and there probably is going to be some more downside to come. I think this is saying. So again, this is copper versus gold, and so yeah, I mean that's as good of an indicator as there is, I think. All right, so going back to the S&P, and let's go ahead and just clear everything off of here, right? We'll go to daily chart. All right, so I like to look at these charts sometimes and say, what is the trend, right? So if I'm going to say what the trend is, I mean the trend was up. And now you see definitely some weakness in this trend. And until I see this shorter term moving average start to stabilize, which then eventually would help stabilize these longer terms, I think that we're in for some more downside, Looking at Qs, this one held up a little bit better, has not crossed the 65-day EMA yet. But I think, the trend is definitely to the downside. I mean, I just don't see anything, saying it's not. I mean, IWM tends to lead the market in general, and this is what it looks like. And this is the poster child for not good, right? If you're a bull, if you're long. When's the last time that we have a look like this? Well, we have a look like that right here, right? And things went much further down. We have a look like that right here. Things went much further down, right? Let's see. This one, not quite as much. Maybe this one. So this one isn't in the same boat, right? But again, there's a choppy action right here. So these were much closer together. I don't know if that's exactly the same. I think this is closer, and it went much further down. This is kind of similar in some ways, much further down. So again, this is just visually on the IWM, what this looks like compared to past instances of that. And I think there's reason to be cautious, right? For me, I'm mostly cash. I'm probably net a little bit short. I am net a little bit short on this, but mostly in cash. Very, very small on the short side. Because the future is not known, right? Anything can happen, right? We can find a vaccine tomorrow. Somebody announces they have a vaccine or a pill that cures this or whatever, and the markets will be out of control to the upside. So again, none of us know. All we can do is follow the trend and what the market is telling us. And they're pricing in my opinion, lower prices and economic slowdown in the next 3 to 6 months. Whether it causes a recession or not, nobody knows. But again, when the market changes its action, I will change my opinion. And right now, again, I'm just saying very cautious. And I think, again, if we're trend followers, the trend is more to the downside. Hope y'all are safe out there. Again, health before wealth. And take care, guys. Bye-bye.